Hello, hello. Let's see who. Alan, can you hear me? Alan, I need you to be able to communicate with me as well. Okay. Let me see on the chat. Can you hear me? Take a look at the chat. I need you to make sure you have. Okay. But you need a microphone. 6 plus. What do you have there? Okay, cool. Can you talk? Please talk, please.
Yes, can you hear me?
Absolutely. How are you?
Sweet. I'm good.
Awesome. Let's see. You asked me if you're gonna make this as 12 members. I'm gonna start with you and see how it goes. I don't think everyone wants to do the training. Some individuals, they just want to follow orders. Okay.
Oh, okay.
But if, like my publisher said, if I get hit by a car, you will know what to do. Okay. Hopefully that doesn't happen. But
well, I will keep praying for you that it won't happen.
yeah, that will happen. Okay. So what we're going to do is that for 30 days, that means that if you count out Sundays, we still have to meet extra 4 days. We're going to complete a full training. Once you're done with what I'm going to share with you, you're going to be in the position to understand what you have to do and how you're going to buy. Now, you have to understand from the very beginning is that we're in the last leg of the bull market. For the first time, there's a bull market in the US that is stretching past the 10 years. That's very abnormal. Now, there's this sort of taboo about the inverted yield curve. And when the curve of yields invert, it doesn't mean that it's a recession. It means that it's about to happen. And about to happen means from 12 to 24 months. So if we were to expect any recession, will be sometime between 2021 and 2022, if it happens. And the reason is because you always have central banks that can do whatever it takes to just keep the show going. Okay. And this is number one thing, that you don't have to be afraid. What you have to do, and the reason for the war room, is for you to be prepared. It's funny because we had a couple members. I shared that on the war room, and for example, we have Michelle as well. She reached out to the publisher and she said, like, "Thanks for giving us Jose." And I was about to tell her, "Don't do that. I'm gonna get fired." Because if you look at the
what did they say?
Well, Michelle was like, "Thank you for giving us Jose. He's doing extremely well in a tough market." Because although we are in a bull market, it hasn't been easy for everyone. If you take a look, but this is something that you have to consider. Okay. So the most important is that you guys get to know what I do. Okay. So I'm going to now share my screen, and right away, what we're going to do is that every day we're going to look at live examples. There's no past here. There's only present and future. And we're going to take a look exactly in what you have to do. So please take notes.
Okay. What am I supposed to see on the screen?
Right now, you have to see is Open Insider. And let me know if you see it.
Okay.
Do you see it? Open Insider. Okay.
Yes.
Open Insider is your first tool that you have to learn to master. You need to know how to use this. And you have to use it on a daily basis. Okay? It's a free tool, and you have to get to know how to use it. It's very important because from here, I always find good stuff. You just need to understand how to filter it. Okay? Now, I already have something that I'm looking, and by in the next 2-3 hours, I will be sharing with the War Room. It's FET, Forum Energy Technologies. Okay, now we're looking at it, and we can see that on November 27, that means yesterday, we have 1 director, 2 directors, 3 directors, the CEO, And also, well, I'm not sure what the COB, I don't care. You see, look at the percentages.
How were you able to find FET? Like, what led you to find FET?
We will get there, but I want to show
Okay.
you exactly what I'm looking at right now and
Okay.
why. See, you have 1, 2, 3, 4. You have 3 directors, 3 different directors,
Mm-hmm.
and you have the CEO. And look at the percentages. Look at the money invested. You have 750,000, almost $1 million. Okay.
Okay.
This just happened. I mean, the file date, it's on the 27th. That's yesterday. The trade was executed on the 25th. Why is this important? Because they placed the trade on the 25th, and only we get to know that information by the 27th. So we have a 2-day delay.
Okay.
Which may not seem like a lot, but it is. But it's still good.
It
is still good. Still good. Okay. So I'm making reference to you on this, so you have to keep an eye on this. So they traded this, they bought on the 25, and we get to know on the 27.
Is it usually 2 days the delay?
Yes, it's usually because of the filing, the trade date, and then you have in securities in the US, you have something called T+2, T+3, which is like trade plus the time, the length time, and that's what it is. Okay, now look at the amount, the value amount: 750,000, 750,000, 100,000, and the CEO is buying $400,000. That's a lot of money.
Yeah,
it is a lot of money. And not only that, look at that. The 4 of them, they bought on the 25th. Why?
All at the same day.
Why now? We're talking that we have $1.5 million plus 500 million. We have $2 million of this security at 128. Okay. Now, what I do that I haven't shared with most of you is that I go to something called Guru Focus, which is a paid tool. Open Insider. Open Insider is free. Guru Focus has a yearly fee. And then I type FET, Fox Eco Thomas, and I'm going to check. And the first thing I look at, a couple things I want to look at. First, number 1, write it down. Remember, we're recording this session, so you will have an opportunity to review it. And the 30 sessions we do, you're going to have 30 recordings. Okay?
Okay.
Number 1, I need the volume to be above 1 million. You see here the volume? Let me know if you see Guru Focus on your screen.
Yes.
Okay, so you see the volume section?
Yes.
1.4. That's a go for me. That's check. Volume above 1 million. Okay?
Okay, that's number 1 note. Okay.
Yes. Once I have identified a security that I want to take a look at, my first filter plus 1 million shares traded. If you don't have 1 million shares traded, I won't do it. I just won't do it because I need to make sure that it's liquid for me to get in and for me to get out.
Where do you see the 1 million shares traded?
See, I have highlighted. You see that?
Oh, okay. Yeah. Okay, so that's the volume. Okay, got it.
Okay, but that volume you can find in any tool. You can actually go to Yahoo Finance and you can type in. If you decide not to get Guru Focus, you can type any other free tool and see what is the volume, the daily volume and the average volume. Okay. Now, the second thing I want to do that I have learned to understand is where is this security? What is happening with this security? So I look to the yield to date. I think you have seen me mentioning YTD, correct?
Yes.
Okay, the reason why I do that is because I do a very primitive and very basic analysis. Where is the security? This security is minus 66% day. That means if I were just to do a very linear analysis, like, okay, what should I expect from my money today if I buy FET? I'm expecting to make 66%. Why? Because this company is down minus 66%. So for this company to generate a positive return, it has to go what? It has to go to zero. So from minus 66, I'm buying all these drawdown, all this negative. That's what I'm looking to buy.
Okay.
So for my trade, and think about this, for your trade to be worth, you need to get that at least. If not, it's a bad deal. So the second step, write it down. You look for the yield to date. You need to know where is this company, what is happening. Another idea for you to think is that yield today, you're buying this company at a 66% discount.
Yes.
That's another way to see it.
Uh-huh.
For example, if this company was to be plus 30% up, you will be saying that I'm buying at a 30% premium. Makes sense? Makes sense?
Yes. Yes.
Okay, so that's how you have to picture buying. You have to picture buying based on relative where is the company. Okay.
Okay.
So far, are you understanding these two filters, these two analyses initially?
Yes.
Okay. See that we're not looking at. Yeah, we're not looking.
Look for you today.
Yeah, I'm not talking about charts yet. I'm just looking at fundamental views on the security. Okay. Give me 1 second. Okay, so this is part of what I do. Now, remember, we always have to identify insiders. Never forget, the basic insiders are CEOs, C-level executives. Okay, it's very common in the US. CEO, CFO. Remember, the CFO is key also because he is the money guy.
Money, yes.
The money guy. COO, and they're all sort of vice presidents, like manager status.
Yeah.
The other guy that you have to follow, which is not easy sometimes to pinpoint, is the counsel, the lawyer of the company. That sometimes is easy to spot. You will see that it reads counsel. I will show you where that is. Sometimes you have to dig a little bit. You have to do your own research. Okay?
Okay.
But having the CFO of the company buying shares and other directors at the same time, and the CEO is plenty evidence that something is about to happen. Okay?
Okay.
We have all this information. Now, for example, this company, and this is a very particular case. This is a company below $5. Now, a couple months ago, I show you. I'm going to go back to Open Insider, okay? And I will use another example that is one of my favorites, JCPenney, JCP.
But you could still so once you join my island,
JCPenney. So on the 28.
I didn't really complete it.
Now, look at the JCPenney, for example, okay?
Okay.
I have JCPenney. Do you see it on your screen?
Once you join my island,
yeah, the one that you're sharing, yes.
Yes, JCPenney. You see all the directors, CEO,
yes.
all that?
Yes.
Okay, perfect. I want you to take a notice that we have for example, we have Javier G. Terrell, director. He's purchasing at 99 cents.
Mm-hmm.
That happened on June. Then in August, we have the director, and I have the CEO buying, same at 59.56 cents. Well, those guys, they're already 100% up. And they bought, when they bought in June, July, August. Okay? So it's an indication. Now, these type of companies below $5, those are high yield. What means is that it's somehow high risk, but you're allocating your money for at least 100%. And when I talk about JCPenney, I'm pretty sure most of the members, they laughed because I understand JCPenney was a falling angel. We all know what happened to JCPenney. Would you say if I come to you with JCPenney as an option, as a company to purchase, would you say that you will buy JCPenney? Probably no.
Probably not.
You know why? Because you see it going down. But the reason why I put it on my War Room tactical portfolio, and the reason why it's called tactical, by the way, my publisher said that I was confusing. I never listened to him. The reason why I put it on my tactical portfolio is because it's called tactical. There's a tactic. There's a tactic. There's a strategy, which is following insiders, but it's tactical. You want to have in life. I'm black, by the way, and I grew in the north coast of Panama. And I grew I'm Catholic, but I grew educated by Jewish and Muslims from the Lebanon. And one day they talked to me both, and they said to me, look, Jose, this is how life works, and this is how we make the money. You need to have a variety of income. We all have jobs. People get confused. Jewish and Muslims, they all have jobs, but they also have a business. And sometimes, most of the time, the business is the job. So they work in their business, but that's still a job. After that, they have real estate. They don't go to markets. They build sustainable income, which comes from real estate. Because people get confused. You make money by building streamline of income, of revenue. People just want to jump from their job to the markets. Big mistake. That's not how it works. It's 1, 2, 3, 4, 5. Actually, the stock market for the Jewish and the Arabs is the last ladder. The last ladder. So the same way, that's why I built the War Room Tactical Portfolio, because if you take this concept from the Jewish and Muslims into investing, you need to have a wide range of securities from different industries, with different maturity, with different purposes. JCPenney for me was a security below $5 with the leading of the insiders, which is in front of you. I have the evidence in front of you.
Yeah.
Insiders were buying. And that's when I decided to buy. That's when I decided to buy. The result, let me share with you. Let me know when you see the positioning. Do you see the positioning?
I do.
70% up. 70% up.
From a discount buy.
Yeah, from the moment I added it, it was about, this is just an expansion of the initial portfolio, but let me show you.
Yeah.
65 cents. And everyone was buying at 59, 56. The CEO, see the leading, see why you have to look at this and understand it. See, the CEO bought at 56.
Yes.
I bought at 65. Follow with,
which is still good. Yeah.
Absolutely, absolutely.
Yeah.
But you see, my leading indicator was the CEO, and that's when I risked my money. Yeah. I wasn't doing anything fancy. I wasn't reading an EPS. I wasn't talking to you about the company future. I was just following the insiders. That's all that prompted me to take the trade. And I recommended that trade to the War Room. Maybe they laughed. I don't know. The publisher for sure laughed. But now, Alan, after all this, at 70%, who is laughing?
You have the last laugh.
I had the last laugh. It's not scientific.
Yeah.
It's not quantum trading. It's not a mathematician thing. It was just common sense. Follow the lead.
Yeah.
And if I did it, I bet you can do it. It's pretty simple. Now, we have to talk about risk, because remember, I'm not your financial advisor. I'm not registered in the US. So I have to explain you this. When I take positions below $5, I'm looking at a 50% haircut. That means for every $10,000 I'm willing to invest, I'm willing to lose $5,000. But because I'm willing to lose $5,000, I'm aiming for 100%. And so far, so good.
Yeah.
And even if it's just a pop, because people can say, oh, this is just a pop, you got lucky, securities, because that's what negative people do all the time, right?
Yeah.
If it's just a pop below $1, well, let me tell you what, a 70% pop on my money in 2 months is absolutely brilliant. So yeah, what a great pop. What a great pop. So okay, now having this example, I'm recording everything. Having this example, you can always come back to the recording. Having this example, what's my point? My point is that with FET, we're looking at the same. Now we're going to go to a little bit of some analysis. Okay.
I have a question.
Go ahead, please. What's your question?
So for the guru focus, for me to learn your thoughts, I'm looking at subscribing to this website as well. So
yes.
what would you recommend? The like how many? What do they have different packages, or what package do I need to buy from them, or it's just one package?
It's just one package. I mean, there are different packages, but this is something very important that I have to share with you, that I have shared with the publisher and a lot of members. The best market to be right now is the U.S. markets. The U.S. markets, whether you like it or not, whether you want to complain about Trump policies, whether you want to complain about America, the U.S. equity markets are the most regulated to protect investors. To protect investors. If you go to China, God bless you. God bless you.
No.
If you go to Europe, Spain, the United Kingdom, right now, the IBEX 35 and the FTSE 100, they're both battling to see which one is the worst equity index in Europe.
The worst?
The worst. Yes.
Oh, okay.
To be the worst, I mean, who is okay, are you bad or I'm the bad? Which one is bad? That's what they're doing right now in Europe. Whether people complain or not, U.S. equity exchanges, indexes, are the best for you to put your money and feel safe. I repeat.
Okay.
Put your money and feel safe.
Okay.
There's nothing else out there.
Yeah.
So investors from Asia, they run out of their equities in Asia. They do invest, but the big bulk of money is in the U.S. all the time.
Okay.
I added a printer.
Now, with Guru Focus, you only have to subscribe to the package in the U.S. I will share with you the package I have. Let me show you so you can see that right away in this one. Okay.
Okay.
So far, do you have any questions?
No.
Let me see the subscription.
Here's some setup for YouTube, like some boxes.
Here. The membership status.
I'm gonna stand up.
Okay, covers markets of the USA. That's it.
Okay.
You only have to get. Let me show you the different memberships here. You see premium? It's $4.49 per year. You see it here?
That's one of my favorites.
Yeah.
Yeah.
$4.49 per year. So that's the one that I'm gonna choose.
Yeah, you have that, and then you have Premium Plus. It all depends. Listen, it all depends what you want to do. I've been using Premium for almost since inception.
Okay, not the Premium Plus, but
no,
just
I
the
mean
Premium.
using Premium. Yeah, we're using Premium premium U.S. markets. Very important.
Okay.
Premium U.S. markets. We've been using these. The Insider report at today's started in 2016. It went published in 2017, 18, 19. We're going to 20. That's almost 4 years of existence. We use premium and everything has been going fine. So you will be fine with that.
Okay.
All right. So does that answer your question?
Yeah.
Okay, perfect. So we have that. Now, why explain JCPenney? Because the same scenario is happening with Forum Energy Technologies, FET. You're looking at a security below $5. You're looking at a security that is minus 66%. Now, very important. Remember, I always talk about buying strength and buying weakness.
Yeah.
And you need to be aware of what we're doing here. We're buying weakness, but we're buying weakness with the leading of the.
Yeah. This is the old modern action. The one that I just showed you is the
You've been
upgraded
led
one.
by whom? The insiders.
Insiders.
This type of accumulation is not normal. Now, you also have to be prepared. Remember, always mind the risk. If you're buying something like this, you at least need a 70% haircut. That means that you're willing, if it happens, you'll be okay. That this goes to 50% off below your price. Means that you will incur in a 50% loss.
Okay.
Now, why is that? Because we're looking, for example, now I'm going to share another tool, another free tool that I use, that you're one of the first that I share with. It's a very common tool. It's not expensive. It's just about, you don't have to buy the premium. It's Finviz. Finviz.com. Now, if we take a look at Finviz.com, and this is just a free version because I use something more comprehensive that I will talk to you in a moment. Okay. On June 25th, you have Bank of America Merrill Lynch going neutral on it from $7 to $3.50. Where is FET right now? $1.28. So that means that you can make close to 180% on your money based on. Go ahead.
So neutral meaning what? So am I going to be looking for neutral?
No,
in the future.
There are two ways that investment banks and research houses qualify equities: buy, hold, neutral. Well, actually four: buy, neutral, hold, and sell. And there are other terminologies. Now, if we look at the terminology used by Bank of America Merrill Lynch on June 25th, they're looking for a neutral position. Themselves, they're not buying, they're not selling, they're doing nothing, but they're still targeting that from $7 they're moving to $3.50. Now, they're doing nothing as an investment bank, but they're telling you that the value of the equity is probably $3.50. Where is right now FET? 128.
128. So it's below 350.
Correct. It's below 350. Way below 350.
Yeah.
Because double will be 250, and then 75% more, that will put us around 350. So you're looking for 175% based on the neutral position of a very good investment bank, Bank of America Merrill Lynch. Okay? It's very important to know that. Now, all that information, you have it? Okay? Now, let's work on the chart a little bit. And let's understand what is taking place and what may not happen. Now, I'm looking at the monthly chart. My number one rule when I go and work on charts is that I start at the monthly chart. I want to make money. I want pennies.
Okay.
I want cents out of a dollar. I want dollars and 20s. So if you look for something below the monthly, you start having issues. I do look for weekly and daily, only when the monthly chart doesn't have enough for me. Right now, I have enough. Now, take a look at this. To the left, okay? Do you see the blue histogram?
The blue yeah.
The blue lines. You see those blue
Yes.
lines? Okay,
Yeah.
now look at this. This is called volume profile. And I learned to use volume profile from Ross Gibbons, the editor.
That's the VPVR.
VOP. Yes, VPR. VPR.
VPVR.
Correct. That is correct. Yes.
Okay.
Okay, now volume profile, it comes with a pro subscription. We have 10 more minutes. It comes with a pro subscription to TradingView. Okay, that will be like $29-$30 per month. I use it.
I don't have the VPVR in my Hawkeye.
No, that's not the Hawkeye. That's part of TradingView.
Oh, okay,
TradingView.
okay.
Yeah. I will explain more on the call. I will call you after we finish this session.
Okay.
Now, looking at the volume profile, look at this. There's a massive accumulation in the monthly chart in this area. The one, you see that? 126, 172.
Yeah.
And then the next level, what is the next level? $5.
Yeah.
You see it? I mean, you can see it here.
Yeah.
I'm not working on my modern mansion.
So if I'm buying here, this is what I'm working with.
Because I didn't have anything else to do.
$5. Good. 50%. So I'm actually.
I have auto run.
Just
so
move these.
Everything else.
Okay.
Everything else is fine except for like
there you go. Okay.
Like I usually go away.
So now check this to $5. I'm looking at least 225% of my money. Okay. With a 50% haircut, based on the entries of the insiders. I have checked the fundamental. Okay. I have checked where the insiders buying. I have reviewed what investment bankers are thinking or have expressed about the security. And I'm also looking at the chart. What may not happen. I'm looking at the volume profile. The volume profile indicates, without any doubts, that there is a massive support around this level, the $1 level. And if the security breaks this level, it will climb all the way to $5. That information is in front of your screen. Absolutely, there's nothing to doubt about it. Do you see it?
Yeah.
Okay. And this is what I do. Now, this is just an example. This is just an example. This security does not have options. Okay? Does not have options. I have to find another example. We will see that tomorrow in the next session. If you like what you heard so far and you really, like I said, that's why I ask you, are you sure that you want to do this? Because this is like, we have to do this every day for at least 30 days. So you're well trained. Of course, after that, we're still going to have contact. We still have, we'll have follow-ups.
Yeah.
But these are all the things I have to see. And then I suggest you, for example, I'm going to give you a preview. I'm going to record this. I already have an option for January 2020. I'm already working on this. I'm working on Intel. And the reason why I'm working on Intel, I know Intel sounds like boring. Yeah,
do you have a paid subscription on this NASDAQ?
It's free. It's free as well.
Oh, is it? Okay.
Yeah, we'll send it to you. It's free.
Okay.
But I already found something that I see that it will give us money. Let me just delete this, send it to you. Don't get in yet, okay? Because I still need to study it.
I won't.
Yeah, and remember, number one rule: if it's not below 245, we don't buy it.
Right. So right now it's $3.70.
It's too much money. Too much money.
Yeah.
I don't think we can buy this one at $1. but I can see us buying this one for at least 145.
Yeah.
Yeah. Okay. So I think the recording is about to end. We only have 40 minutes all the time.
Okay.
So I give a call and we're gonna go over this. And then once I have the recording, I will update it and send it to you.
Okay.
It's very important that you take notes all the time.
Yeah.
If you master this, and I tell you, Ross Givens just gave me a few indications. I talk to him like once every 3 months. I came up with this on my own, and for you is for you to believe or not to believe. What happened to me is that I noticed about this concept, which is we're going to work on you so you understand. Price rotation. Ross Given says that securities go through two different situations. They either go down, go up, and then they start doing something which is called discovery mode. It means that they're looking for new highs. I thought about that, and what I found is like price rotates, like a gyration. Price has to rotate between levels where the big boys, they take profits and they load the boat. So what you call resistance support is actually the institutional money getting in and getting out. And over a period of multiple years, they developed those levels. And we can identify those levels. And that's why I developed this concept of price rotation. The second idea is that retail traders want to buy everything when it's at the high. If it's at a high, how are you going to make money?
Exactly.
You have to sell higher, but to go higher, you need catalyst. If you don't have catalyst, you won't happen. So you need to know when to buy. So the reason why
and always buy at the low. Yeah.
Exactly. But the question is how you know that. You need to understand how the S&P 500 rotates. And that's what you don't know right now. And that's what I know. Why do you think, and I'm going to leave you and finish this recording with this idea. Why do you think we make money on the McDonald's calls? McDonald's calls is not doing that well, the company. There was not earnings, but I knew something that no one else knew in the war room. The S&P was about to rotate higher. So last week, everyone was like, oh, it's at 3,100. It seems high. Run. It can always go higher. And it did. And that's why we made money on the McDonald's calls. Because the S&P rotated higher. Now the company, the index. Okay?
The index.
Yeah.
So look for the index.
Exactly. You need to learn to know what the index is doing. If you master that.
Where do I look for the index?
I will explain that to you in the next few sessions.
Okay.
Yeah. Okay. So we're going to leave it here. I'm going to record and then I'm going to give you a call in a moment. Okay.
Okay.
Okay. So thank you. This will be your first session. Hopefully we continue on the next 29 sessions. This is another War Room live session. This is for Alan Vergara. Thank you so much. I talk to you tomorrow.
Okay, thank you. Oh, tomorrow or after this recording?
Well, after this recording, but also tomorrow. It's another session.
Oh, yeah.